Paul, one of the things we see at Skyline Point Capital on the multifamily marketplace that right now, as compared to 9 months to a year ago, with the interest rates going up, that the supply of available multifamily is diminished. And what we're seeing now, that's the multifamily apartments that are for sale are still at the increase in interest rates. The returns are less, the cash flow is less, and for that dollar amount, the risk is even higher. So the common trend is people to sit on their dry powder because things are starting to fall out. People are getting retraded both in debt and in price. And with what we're doing at Skyline Point Capital is just kind of taking a breath. Let's see what the next 90 to 3 months to 6 months happens, but there will be some deals. But it has changed the dynamic of this industry. And some guys are doing well, and other ones are going to be having a really tough time in the future.
Yeah, I think it's smart, Steve, for you at Skyline Point Capital to do that. But what are you seeing, right? I mean, don't the trends still show us, the demand, right, is out there to access that from people wanting to live there. And now are they getting priced out of, their own personal residential home? Like, but are you all saying like, hey, so many people got in and now the pure speculators might be getting retraded on the market because they didn't know what they were doing or just they didn't know how to price it. And so you're just being smart and saying, hey, let's wait and see how this all pans out.
Well, you bring up a good comment. What we're seeing is that if you stay in the Sun Belt areas or the cities, the Dallases, the Nashvilles, Charlottes, and the southeastern area, you're still getting a lot of movement into that area. But we're starting to see some decrease in rent month over month. It's just starting to come around, but it's not a drop off, but there's a little decline. But the increase is still in those time frames are double digits over last year, the rent increases, but they're not growing at the same rate as it has in the last couple of years. And there's still, we love buying in very high growth areas from that side of it. But the supply of people selling now, because as the interest rates go up, the price of the properties go down, and there's less supply that's there, but there's a big pent-up demand of dry powder that's still sitting out there. There's a lot of dry powder sitting out there. So we look and underwrite properties, but we are seeing that the returns are less and not favorable for our investors due to the risk involved. And if we find one, we're going to go after it. But we're very cautious in what we do.